Hello, everyone. Welcome to Nimbus Capital Technical Workshop, Technical Analysis Workshop. Okay, so for today, we are going to be looking at Facebook. Just a tiny weeny things. The holding company itself is changing to Meta, but the app itself, the social media platform that we are using is still be named as Facebook. So we are not going to be saying nonsense like let's add each other on Meta or whatever nonsense. Okay. But I believe this name change come into effect mainly because I believe Facebook as a company, it is no longer social media platform company. I think it have grown so much since its inception. They have it essentially a tech company now with some gaming on the Oculus side. There's a lot of tech and cloud stuff going on. So if you want to consider the company as a whole, I believe the social media is just a tiny portion because Facebook also have things like Instagram and WhatsApp, all these messaging platforms. So the social media platform only consists of, I believe, a tiny portion. And I guess it is more like a rebranding, to let people know that, hey, we are more than a social media platform now. So I guess that's what drives the change. But the app that we are still using, it is still Facebook. So I guess until the until Mark Zuckerberg officially changed the name on the New York Stock Exchange, I guess Facebook is still Facebook right now, because on TradingView, it is still listed as Facebook. Okay, so yeah, enough of all the enough of all the let's add on, let me add you on Meta, or what is your username on Meta. Okay, so the reason why we are doing Facebook today is it is one of the requests by my Patreon subscriber. So hello Shifu, will you be able to do a quick estimate of stop loss and potential TP on Facebook? Is stop loss at 300 safe? And also love your session on Tesla. If you could do more FANG stocks like FB, that would be great. Love the Netflix trade, TP fully liao. Thank you so much. Okay, so sometime once in a while, I do get requests for certain counters, and I do try my best to take a look at most of the requests. And sometimes when the requests coincide with something that I personally would like to share also, right? Sometimes I do share my views and the analysis on certain stocks. But also, of course, I will look at the quality of the stock itself. For example, when we are looking at Facebook, if you if you look at Facebook, oh sorry, this is not Facebook. Let me go and find Facebook. Okay, so if you look at a counter like Facebook, the first thing that I look at is the long-term trend itself, the long-term trend. And if I see that the long-term trend is fine, right? Normally, I am happy to do requested analysis, especially from long-time subscribers. but if you ask me to analyze and ask me for my opinion on counter like this, then the first thing that comes into my mind is, number one, I think you are stuck in this counter. You did not stop loss. You are like in a very big rate now. You just want my affirmation that is going to recover. And number two, right, I would think that you are wasting my time. I do pick and choose what are the kind of stocks that I will like to do analysis on when there is request. Okay. So the best kind of requests are those that show me that you have done your homework. You have a certain plan and you are just trying to like seek my opinion. But other requests such as you are holding in the loss, you just want the counter to recover, or you give me a one-line sentence, hey, Facebook can buy or not, then definitely I'm gonna I'm gonna ignore those requests. Okay, so let's take a dive at Facebook. So firstly, is very important, wait now. So this this one, let's refresh back at this. Okay, so at the core of our strategy, we rely on this pyramid, this hierarchy level. We'll always look at trend. trend first. That's why even before I decide whether I should do an analysis on this counter or that counter, I will look at the long-term trend. If the long-term trend is such, right, then I'm not going to waste my time on looking at candles, support, resistance. I'm not even zooming in on that chart really. Okay, so once we have the trend, the moment we see that the long-term trend is good, is going up, is strong, then we can take a look at chart structure. Can we find any resistance? Can we find any double bottom or whatever chart structure, any support, this kind of stuff? And once we are able to identify certain important chart structure, and then we start to look at candles. So that is my biggest advice that I can give you. Look at the chart in this manner, because a lot of people are not doing like that. A lot of people are doing in a different manner. For example, Tesla, okay? So when people see Tesla like this, what do they see? For example, on this day, they look at the candle first. They are doing the opposite. They look at the candle first. Then the moment they see the candle, wow, this is a shooting star, is a pin bar. Oh no, it has a lot of volume. I think we can short, we can short sell. And then what happened? What happened the next few days later? We have Tesla continue to go up, gap up. Every day it is gapping up. So what is the crime here? What is the crime? The crime here is you are looking at the candle first. You are not even looking at the trend. You are looking at the candle first. Okay, so the person, the trader, just made his or her short decision based on one candle, and then cry about it when the short position is like in a loss. So keep that in mind, okay? Okay, so now let's take a look at Facebook. First, we have gone through this already. We have identified that Facebook is in a long-term trend. So this is very good. So we have something to play with. We have the trend on our side. But when we are talking about trend, right, it is also a bit, you have to be careful, because when we look at the short-term trend, for example, from September until now, for the past 2 months, it is a downtrend. It is a downtrend. So we cannot totally ignore the short-term trend also. It is a downtrend during this short term. And the way I see it, if you are looking to buy into Facebook, right? What I would think of it is that you are making use of this retracement to get your Facebook at a cheaper price, since overall it is still going up. So what this downtrend is kind of doing is, it is trying to find a higher low. This downtrend is trying to find a higher low. But is this the higher low? Can it go down some more and still manage a higher low? I believe it can, because when we look at this, right, we have a low here, and then we have another low. Okay, this one's slightly higher, slightly higher. And then we have another low here. If you want to consider this also, we have another low here. But at this point, right, this will be so-called the major higher low, the major consolidation. So if you want to do like the Elliott wave or what, right, what you will see is like this. So this is the low here. So now Facebook is on a downtrend. As it goes down, right, as long as this particular level is not broken, it is still considered a higher low, meaning it can go down to here, it is still a higher low. It can go down to here, it is still a higher low. It can go down all the way to even here, it is still a higher low. And it can do this and then go up, and this is still technically an uptrend because the previous low have not been broken. This is still a higher low. So when we are trying to buy into this short-term downtrend, right, we are assuming one thing. We are assuming that this point here is a established higher low. But the key thing is it an established higher low? I don't think so. It can go down some more. So we need to identify that low first. We need to identify that higher low, and we need to understand, we need to accept that possibility that Facebook can be still in a long-term uptrend, even if it drop all the way to like 265, 270. We must be aware of the possibility. Okay, So now let's dive closer into the trend itself. So if we look at the short-term trend here, right, you can see like it's trying to, like, you can see this zigzag pattern here lah. So take note of this high here. So the key thing is, how do we know that if this point here has been established as a higher low? How do we know that price is not going to jump down here like this? Actually, there's no way for you to know, but in order to increase the probability of you not getting stuck in what it seems like still a downtrend short term, right? What you can do is you wait for a higher high within this short-term downtrend, meaning this is your lower high. Okay, this is your lower high. This is your high, comes down, lower high, comes down. So once we have a recovery that goes beyond this point at 340, then we have established a higher high, and then this can be considered a established higher low on a bigger time frame. So now it's getting a little bit confusing, because we have a higher low on a bigger time frame and we have a higher high on a shorter time frame here, okay, shorter time frame here. So we want the price to go above and create a higher high on this shorter time frame, and that would represent a higher low established on the bigger time frame. So I'm gonna give you guys like maybe 10 seconds to digest that for a while. Okay, so because the thing is that I'm counting the 10 seconds. Okay. Okay, so the thing is that if you enter at any point before this level, 340 level has been broken, what it can happen is price can go up a bit and then it can continue to go down, and this point here will become a lower high within this short-term downtrend itself. This short-term downtrend is still intact and it will continue to go down until like it has managed to find a support, and hopefully that support will be a higher low on a bigger uptrend. Okay, so we do not want to go into Facebook in that situation. We only want to go into Facebook when this level is broken. This level is broken. Okay, so that is what we want. And now let's take a look at now that we got the trend sorted out, let's look at the chart structure. So when we want to look at chart structure, it's a little bit hard to look at it like this because candles are a bit fragmented. But when things are a bit harder to see, right, what I like to do is I like to go up one time frame. So in this case, I will go to weekly time frame. Okay, so on a weekly time frame, we see we see things in a little bit more clearer. The first thing that pops up right into your face is this portion here. This is a very long consolidation that took place from July 2020 all the way until 2021 March. So it is about 9 months long consolidation, and eventually this 9-month long consolidation, the resistance that was being formed here, it was broken. Okay, so I guess the resistance is like somewhere like this. Okay, so it was broken. Okay, so we have a resistance here, and after it broke out of the resistance around April 2021, you can see that it was retested. And it was successfully retested because it went back down and it continues to go up. So now that I have drawn this, right, if I go back down to the daily time frame, you can see this much more clearly. You can see it much more clearly here. We have a resistance, and then that resistance was successfully retested. So what we have here is a resistance turned support level, this 2962302. Okay, and on our short-term downtrend during 2021, we can also see the short-term resistance much more clearly here. This point here, this is a short-term resistance. So here, right, what can we deduce is that even though the price level, the current price level of Facebook, it does seems like it's getting supported, right? It can kind of go back down to this resistance turn support area to sort of retest this area again. There is a good chance. There is a good chance that it can continue to head down to that direction. Sorry, let me remove all these drawing to make things clearer. Okay, so we have a short-term resistance here. I'm gonna make it a different color so that you guys can tell apart. And then we have that major resistance turn support that is forming right here. So there is a chance that this can still continues to go down and retest this level. We have to be prepared for that. And then maybe once it reach this level, then it will start to go back up. So this is one of the, I would say, high probability movement that it can happen. But what if it doesn't happen and it continues to move up? So if it continues to move up, then we can actually look for a buy trade after it broke out of this resistance at 343, because by breaking out of the resistance at 343, we have established that the lower high has been broken and the chart is now going for a higher high. Okay, so these are the two levels that we can deduce. So if you want to create a trade strategy, if you want to create a trade setup from all this information, right? That is where things get a little bit tricky, because a lot of traders, they are expert in technical analysis. They know how to read the chart. They know how to find this, find that, all the pin bar candle, this and that. But what they do not know is how to properly set up a trade. They don't know how to turn the knowledge into a trade setup. They just have the knowledge, which is why out there in the forums, Facebook, everyone seems knowledgeable, but they are not profitable. So that's the most common issue with trader. Knowledgeable but not profitable, because they have difficulty in turning analysis into trade setup. So here I'm going to show you how I will be turning this analysis into a trade setup. So number one, we can make one. This is our plan one. Plan one is, if the price goes up and break 343, then we can enter here. We can enter at the breakout. And when we enter at the breakout, as we have discussed, it means that price is going for a higher high within the short-term downtrend. And by breaking out, we have also established this point here, this point here, which is maybe about 308, is now established as a higher low on a bigger time frame. So if price goes up, breakout here, we can enter here, and this is now a higher low. So we have a breakout trade that we can take somewhere here. And then since this is established as a higher low, our stop loss will be slightly below here. So probably maybe like 300, slightly below that. Okay, slightly below that. So why is our stop loss there? Because our analysis, we assume that if price can continue to go up, meaning the higher low, the lower high here has been broken, and it is going to continue its uptrend. So if price does not go in the way that we anticipated, and if it continues to come down and hit 300, right, it shows that our analysis is wrong. What we have analyzed is wrong, and we should be out of the trade already. That's why the stop loss is there. But we do not want to be prematurely exiting the trade just because price retrace a bit or price come down a bit, and then like you get panic and then you exit. Because as long as price doesn't go below this point, our trade is valid. So we do not want to be exiting the trade when our trade setup is still valid. So this is where a lot of traders have issues. They don't know where to place their stop loss. The moment they buy, they immediately assume that price will continue to shoot up. But the thing is, sometimes price can retrace a bit before it decides to shoot up. So you must know where your stop loss is, where to put your stop loss. Okay, so that's the first first trading plan. That's our first trading plan if Facebook price decide to break this. So how about a second trading plan? The second trading plan is we can make use of this so-called the resistance turn support, this level here. And sorry, let me work out the lines. Okay, so we have this level here from 303 to 394 that is acting as a resistance turn support. So in this case, what we want is we want the price to come down to this level. And once the price come down to this level, we want to see a recovery. We want to see a recovery in the price. So in this case here, right, we are not going to blindly enter as the price is coming down, but we want to see a bullish candle to let us know that price is recovering. For example, this is a bullish candle. This pin bar here is a bullish candle. Okay, so now when we are looking at candles, we are not just blindly looking at candles. We are looking at candles based on the chart structure. We are looking at specific candle at a specific chart structure. The chart structure is resistance turn support. The candles that we are looking for is a bullish candle. It can be a big green candle, or it can be a pin bar or a hammer, or whatever, anything that represents a bullish sentiment at that level, at that chart structure level that we are referring to. So that's it. That is where the second mistake that a lot of traders make is when they look at candles, they look at the candle by itself. They are not looking at it with respect to chart structure, and the chart structure have to be looked at with respect to trend. So all these things needs to line up properly, and that is where you will get majority of your winning trades will be coming from, because you are able to line up all these things together and not randomly trading any bearish or bullish candle that you see. Okay, so now the important thing here is you want the price to retrace, but at the same time you also want to see a bullish candle first. If you see a big red candle coming down like this, you do not want to immediately like enter just because it has hit the level, because it can continue to go all the way down. We do not know also, but we want to at least wait for some kind of a recovery that comes up here. So the moment you see that bullish candle recovery that comes up, right, you can take the trade. You can take the trade at the recovery, and this area will become a higher low. This point will become a higher low, and you can actually place your stop loss below there. So now in our second scenario, our stop loss will be somewhere around maybe 280. 280 will be a nice place to put your stop loss, and that is how we will take the trade if the price continues to fall. Okay, so now this is trade plan number 2. So what if price continue to fall, doesn't recover, it continues to fall all the way, then what do? Very simple. You don't take the trade. You simply do not take the trade. It's that simple. So you cannot be so fixated that I want to trade Facebook. I want to trade Facebook. I want to trade Facebook like a kid like that. Like if you don't trade Facebook, you will die like that. So sometimes if the plans are not going well, then you have to let it go. You have to let it go. Learn to let go. Learn to let go. A lot of traders post quote like, oh, we must sometimes letting go is not as painful as holding on, blah blah blah, you know, those kind. But when it comes to trading, they are doing the entire opposite thing. Okay, so learn to let go. Learn to let go. So now let's recap our trading plan. Okay, so now we have analyzed the chart, we have established the trend, we have pinpointed the chart structure, we have looked at certain key candles, that we want the price to go above or go below or whatever lah. Okay, and we have identified all this stuff already, and after we have identified all this stuff, we have set up 2 trade plans. One is when the price goes up. The second trade plan is when the price comes down. So The first trade plan is we will buy the breakout of 343, and then after it breakouts of 343, we will place our stop loss around 300. That is our first trade plan. Okay. The second trade plan is if the price continues to go down to 300 280 area, we let it go down, but we wait for the recovery. And when it recovers, when we see that first bullish candle that start to recover, we will buy that recovery and we will place our stop loss below the turning point, So make sure you give it a bit of breathing room. You don't go and place your stop loss right at that turning point, right on the dot there. Please do not do that. Never ever do that. Give it some breathing room. Don't stingy, okay? Do not stingy. You stingy that 1 or 2 pips are your entire trade. You will give up your entire trade, which could be worth like a few $1,000s in profit because of that one like $20, $30 worth of pip. Don't be that guy. Don't be that trader, okay? So you can place your stop loss slightly below that turning point and then get your trade. So now here we have effectively done 2 things. We have a trade plan when the price goes up. We have a trade plan when the price comes down. And of course, if the price continue to go down, then we simply do not trade. So we have a plan for every situation that Facebook can result in. For whatever happened to Facebook, we have a plan, we have a trade plan, and that is how we establish and work our trade plan based on technical analysis. Not look at the chart and then wow, a bullish buyer. No, it does require a lot more input. So now is the time to do a bit of self-reflection. When you are entering your trade, are you doing as much thinking as I have done right now? Are you putting enough input as I have done in this trade setup? In fact, I can tell you that Facebook right now is not a valid trade setup, but the moment I look at this candle here, right, I will be like, nah, I'm not going to buy this. But the key thing is, even then, I am still able to formulate a trade plan, even though it is something that I wouldn't buy right now. Okay, so are you putting in as much effort as I am when you are looking at trade setup? If you are the kind that look at Facebook, someone say buy Facebook, you immediately go and buy, then you cannot be surprised when you are not profitable as a trader. So you must put in effort. You must put in enough input. Make sure you know what you are doing. If you are following someone else trade, you don't know what their trade plan is. So you can follow what they are doing, but have your own trade plan. Have your own trade plan. Think through your plan a bit, and then you take the trade. So now we have arrived at the end of this analysis, but there is another thing that you have to ponder a bit. So we are able to successfully come up with a trade plan. In fact, 2 trade plans for Facebook. But the key thing here is, do you want to trade Facebook? Even with this 2 trade plan, do you want to be trading Facebook? Because if you look out there in the market, we have Netflix, we have Tesla, we have CrowdStrike, we have Nvidia, we have Microsoft, we have Alphabet, we even have AMD. Or if you want to look at a little bit more obscure counter, we have Synaptics Incorporated, we have Umbrella, we have Marvel Technology. All these are strong uptrends with no upper resistance. And within the presence of all these strong uptrend counter, do you want to go into Facebook where it is now currently retracing? So that's the question that you need to ask yourself, because most of the time it is not simple as the market give you one counter to trade. The market is going to give you 10, 20 counters and you need to choose which is the best, because in trading, opportunity cost is the highest cost. If you don't care about opportunity cost, you can simply go put your money into SPY, Vanguard, ETF or whatever, and then you'll get that 10% per year, which I mean is a very good return. It's very good return. But the thing is, there are something that going up 30-40% instead of 10%, and you might want to be chasing those. Okay, so that's a little something to think about. So here I'll end my analysis, and thank you guys for tuning in. Have a good day, everyone. Have a good week.